Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is June 4th, 2024, and today on our call we have the CEO Don Gray from Givex. Givex trades on the TSX exchange under the symbol GIVX, and it also trades on the OTC under GIVXF. The company is currently trading at 77 cents with about 128 million shares outstanding, or about a $99 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trevor. Don, good to see you. We were chatting earlier, trying to figure out how long it's been since we last spoke. We've come to the conclusion it's been about a year and a half, so it's been a little while. But obviously, a lot of progress since the last time we spoke. So very happy to have you with us today. Before we sort of get any updates, maybe remind everybody what GIVX Corp is all about and what you guys do.
Well, GIVX, what we do is really incorporated in our name. When a merchant gives something to a client, the client gives something back to the merchant. It's all about the transaction that occurs between a merchant and a consumer. We try and gather as much of that transaction data as we can. We started off with gift cards many, many years ago, and we were really only capturing gift card transactions. Then we added loyalty pockets to that same gift card. So the gift card became a loyalty card. Then we started picking up loyalty transactions. In about 2014, we added a point of sale system into our platform. So then we started picking up POS transactions. Now, before that, we picked up POS transactions by working with a lot of our integration partners, but they'd have to send us those transactions in batch. Whereas with GIVX, where we have our own point of sale system, it's all in real time and done in real time. And then the last 3 or 4 years, we've added a lot of functionality to our POS platform. And certainly during the pandemic, we added online ordering. We added, apps, payment apps. We added PWA, which is our application for users and for managers. We've added analytics. So over that period of time since we started, GIVX is now basically capturing all the transactions really that can occur between a merchant and a consumer that are from the POS, online ordering, kiosks. We now do kitchen display systems. We do the menu boards so that we can also track the time it takes. By the time you come into the front part of the restaurant or the QSR location, we can actually track how much time it takes from the time you get there till you get your ticket or you get your order or you pay your bill. So there's a lot of data that we've now captured that we are able to start building into our analytics programs. And recently we just announced our latest program, which is GIVX Engage AI, which is now taking a lot of that same data and starting manipulating it into programs to allow our merchants to get more granular in the communications they do back to their back to their consumers. So that's, kind of taking it from gift cards way back in the day now to kind of a full-blown suite of services that allows our merchants to really understand what's going on with their consumers, to help them manage the product mix, to help them manage the gross profit on those products, to also understanding how often clients are coming in the door, how often they be buying online, and what the trends are. That's kind of a snapshot.
Perfect. Now, clearly, you've been doing it for a while, and over the course of the last several years, you've made some acquisitions. Is that the plan going forward? Do you feel like your product suite is full, or are you still looking for other tuck-ins that fill it out?
Well, the product suite is full, but there's a lot of innovation going on in areas. For example, in 2022, when we made one of the acquisitions we made in the States was grocery, which has now got us into the grocery business and C-stores, so we can start selling our services into grocery and hopefully start selling our POS system into C-stores. A lot of independent grocers is where we're focused, not on the major chains. So there's, finding more acquisitions that will help us find more locations is really the name of the game for us. We have a fair number. We have a lot of product viability already. We have a lot of the functionality we already need when it comes to transactions between a consumer and a merchant. So really, it's now finding more merchant locations, really, which is our primary objective. The acquisitions that we may or may not do in that area will be primarily around finding more locations to sell our services into.
And geographically, where do you sell into? Is it North America, or do you sell outside North America as well?
Well, 30% to 35% of our business in Canada, about 35% in the United States, and the balance outside of North America. We have offices in the UK. We have offices in Brazil, which is a very active business area for us. Mexico, Australia, New Zealand. Don't have offices in New Zealand, but we have office in Australia, Singapore, and in Hong Kong.
And what's the sales process for something like this? Is it fully online? Is it a combination of online and sort of on the street, or is it all,
Well, all the offices that we have in our offices, and we have 12 offices around the world, we have sales and client support, client relationship managers. So they actually do outreach. We go to trade shows in all of all those key markets in the areas that we're in to try and get our name out there, let people know we're here, and continue to let our existing clients know that we're still here and will continue to be here for years to come. So this is, so it's really, we sell, most of our business is sold, new business is sold by our own team on outreach. We do have resellers, and we have a few dealers that also resell our products, but by far, well over 90% of our business is sold internally. We don't use dealers.
And Don, what's the addressable market for this type of product and service? How big is it?
Huge. I mean, I don't have the recent statistics, but certainly the gift card market itself, which is not only gift cards, but stored value, e-wallets, all that sort of stuff, kind of all incorporated into that same thing, is over, it's $1 trillion, and nobody has a hold on that market completely, not even close. So there's lots of room for a company the size of GIVX to grow within the small to medium-sized clients, and even some larger clients. It's a massive market. In the POS market, which is everybody's familiar with Lightspeed, Micros, NCR, those companies, they don't even have dominant positions in those particular market spaces. So within the kind of the areas that we're at, which is engagement, which is gift and loyalty, and kind of online ordering, etc., GIVX is a huge market. Within POS, another very large market. And then payments, which we dabble in, we actually provide payment services more. That's also a massive market, but very low margins. So we're kind of being there as a kind of a service provider where we can make margin more as a referral fee than trying to get into heavy duty into the payments business. Because I think over time, while that's great revenue and can show great great top line revenue, it doesn't really help the bottom line, because it's the margins are so skinny. So we'd rather just take the commission that we make with Agin, who's our payment processor that we work with, and we can work with them all over the world. So all the three areas that we're in, there's plenty of runway and opportunity in all the markets that we're in. There's no dearth of client opportunities, that's for sure.
Now, you mentioned that there's other competitors. Give us a sense of sort of the competitive landscape, and sort of lastly, like what makes you better? Why would a client choose you?
Well, first, on the competitive landscape, in the gift and stored value marketplace, GIVX is already a pretty good sized player globally. Our primary competitors would be Stored Value Systems, which is a big competitor, primarily based in the United States, and Fiserv, which is obviously another big competitor in the United States. But those guys are, they focus on major corporations primarily. We've now picked up some business from them, like we just signed Shell Oil, for example. We picked them up from Fiserv. And Rogers, Blue Jays and everything, we just picked them up from SVS. So we are picking up opportunities from our major competitors because they haven't focused on the gift card business like we have. So we have a lot more functionality built into our system. So from that perspective, there's a lot of competition there, but it's nothing that we're afraid of. On the POS side of the business, there's plenty of competition. As you know, there's a lot of it out there, but it's a lot of our bigger POS competitors are focusing on payments. They're not actually focusing on the POS. So we feel that we've got a real advantage because our focus is on making functionality in the POS as best we can, so that the merchants get really good data. So that's our kind of our analysis of the competitive market. We don't think we're going to, we're not being squeezed by competitors. We rarely bump into them in the marketplace. And all of the point of sale companies out there are actually strategic partners as well. Most of them integrated with almost everybody for them to do gift and loyalty using our gift and loyalty card platform. So that answers the question.
Yeah, no, it's perfect. It's perfect. And then what does a typical engagement look like? How long is it for, and how do you sort of get paid?
Well, our primary function on getting paid is per location per month on long-term contracts, 3 to 5 years. So our objective is, obviously many years ago, we came to the conclusion that actually charging by transaction didn't make a lot of sense, because whether I did 500 transactions or 5,000 or even 500,000 transactions for a merchant, the amount of investment that we have to make in hardware is relatively nominal compared to the investment we have to make in people to support the services, et cetera. So we wanted to kind of lock in our costs, and we wanted to be able to be more confident that what our revenue streams were. So we moved from a model where we would have longer term contracts, and they'd be per location per month, and and with kind of a band saying, okay, well, this will give you up to, say, 1 million transactions. You get up to 1 million transactions, then we'll bump you up to the next band and give you another 1 million transactions. So it was really, that's what we've done, and that's our primary marketing, and it works well for gift, for loyalty, for POS, for everything. So it allows the clients to lock in their costs. They know what it's costing them, and they know that if they do a good job on selling their gift card programs, or they do a good job on selling a lot of POS, they're actually not going to pay more for the transactions that they're doing. They know what their costs are too. So it helps set the cost for them, and it gives us a fixed opportunity, and we know what the revenues are going to be.
Perfect. Perfect. By the way, I'll remind everybody that's listening, if you've got a question you'd like me to ask Don, please use the chat function, and we'll ask the question. Don, I noticed in Q1 you guys did $20.8 million in revenue. You were profitable again in this quarter. Give us some financial highlights of the business right now. What kind of growth rates do you expect, and how does that affect the bottom line?
Well, the GIVX has historically grown without acquisitions between 8 and 10% a year. We don't expect that to change. We'll continue to grow at that rate. We're not a unicorn. We don't try and be a unicorn. What GIVX is a consistent growth company over time. Last 2 years, we had to write off the restricted share units that we granted to our employees at the beginning of this process when we went public, which caused, obviously we had to write all that off. It was a big write-off, almost $12 million that we had to write through the income statement. But these are commitments I made to team members 15 years ago, where a lot of people started working with us. They got equity, and they got it as phantom equity, which was converted into these RSUs. So those have all been kind of paid off now. So that's why we actually showed real earnings first time in a while in the first quarter. My objective, of course, is to continue that trend so that we continue to get the top line growth, continue to work hard at getting our payroll costs under control. Very hard, very difficult. I have to admit it. It's not easy. Lots of payroll pressures, particularly in tech. Even though they say that it's supposed to be easing off, it's not easing off. It's still tough. But we're working on it, and we want to get that payroll costs and everything down to, so in our general operating expenses at the 50% of our gross profit, so that we can try and get our, what our objective is, to get the EBIT up to 15%. So that's our objective. I can't say whether we're going to hit that this year, nor do I want to make any forecasts that we're going to hit it this year. But if you want my overall thought process, continue to grow 8 to 10% a year, plus took in an acquisition or two if we find something that really is accretive and works, where we can actually bring it in. It's got better EBITDA multiple, lower EBITDA multiples than we have, so it's accretive. That we don't have to take a lot of risk on it, etc. Those acquisitions will help us grow that even faster. And then whatever the top line is, our objective is to move our EBITDA from around 8. Right now it's around 7 or 8%. I want to move it up to 15, but that's my objective. And to do that, I need to have payroll costs really under control. And to do that, I have to sell my way out of that issue. It's not something that I can do by terminating a lot of people or anything like that. It's just not possible in our business.
Gotcha. And you may have said it there, but what does the business run as far as gross margin? What kind of percentage gross margin you guys?
On the gross profit side of the business, we're at 70%. That's the number I
Mhm.
want to work with, and
Mhm.
it's hovering around 69, maybe 71 or 70.
Mhm.
But the real number is like what's the G&A and the payroll as a percentage of that 70? And right
Mhm.
now it's almost 55%. It's got to get under 50. That's
Right.
my objective. And to do that,
Yeah.
to do that, I got to sell more and we got to do more gross profit, and be harder on making sure that we're more efficient and our productivity
Mhm.
continues to improve.
Mhm.
Those are the tricks. But people are pushing for wage increases, a lot of inflation
Yeah.
out there. So
Yeah.
somebody that we may have been able to hire 2 years ago for 60 grand now wants 75 to start,
Right.
and people that are making 100 now are looking for 120. So it's a tough out there. I don't know if
Mhm.
anyone's seeing that, but we're sure seeing it.
Yeah, no, I mean we're hearing it from a lot of CEOs as well, and that's one of their pain points. That kind of lends to the next question here. Really is around the challenges you face. What sort of are the bigger challenges that might keep you up at night?
Well, the big challenge is that payroll. That's a payroll
Mhm.
challenge. That's my biggest challenge. It's the one I worry about most. How are we going to deal with that over a period of time? Um, the other challenge is, our stock is it's improved a lot. When the last time I talked to you, I think our stock was probably around 35 cents or something like that. Or it's now at least 77, and it went up to 90 at one point.
Mhm.
So, our objective obviously is to hopefully see that stock move up, so that if the shares are up there, then it's easier for me to use shares as part of my acquisition strategy. When they're at this stage, it's hard for me to use them as part of my
Mhm.
acquisition strategy. So um, that's the those are the two things.
Gotcha.
The stock
Yeah.
price up, but keep my payroll costs in line.
No
We're
kidding.
getting
Yeah.
business and new business and selling clients. That is not a problem.
Okay.
I saw one of the questions there is, are we selling to big clients? Yes, we sell to big clients. We almost all the big clients. We have to do RFP, like with Shell Oil and with Rogers, we had to win RFPs.
Mhm.
So we're on the RFP list now of a lot of majors, so that we are at least in the game
Mhm.
for gift and for loyalty. Now getting on more POS and
Mhm.
certainly in the UK, we're doing really well with kiosks there. Uh,
Mhm.
so yeah.
Gotcha. And what's okay, a little bit about the financial, the balance sheet. How much cash do you have? Debt, if any? What does the balance sheet look like?
Well, our cash, we have our cash around $25 million in cash, nominal debt $3 million maybe.
Mhm.
So we have an excellent balance sheet. We have lots of dry powder for doing acquisitions. We also have very good banking relationships to be able to borrow if we need to. We have lots of people willing to do things like pipes if we want to do that. So there's things we can do if we wanted to do a strategic buy that where we needed to use some very good long-term debt. But we haven't found anything yet to do that. But we have that ability. If we wanted to do a kind of a bigger or a game-changing acquisition, we're in a position that we could do it.
Mhm.
Right now it's easy to do a $3 or $4 million acquisition. I can do that out of cash flow. I don't really have to do anything. But if
Mhm.
I wanted to do a 15 or a $20 million acquisition, then I'd have to do something like that.
Right. And if I'm not mistaken, you have an NCIB in place. Are you buying back stock?
Yes, we're buying
Yeah.
it at 9,000 shares a day,
Yeah.
which is a maximum we can buy.
Okay. Gotcha. And
Unless we find a block. If we find a block, we can buy a block.
right.
But we haven't been able to find any blocks. They're all small.
Right. I mean, if you're an acquirer, is that what's your rationale around NCIB at this point? Obviously, you think the stock's cheap, but is it the best use of capital right now?
Well, it's not costing us a lot to
Right.
try and support the stock a little bit. I mean, at 9,000 shares a day, I mean, it's going to take a long time for us to buy any meaningful amount of stock.
Right.
But if it's only trading at 50 to 100,000 shares a day, that 9,000 can help maybe. So we it's not and it's not a bad use of our stock, because I believe the stock's way undervalued. So at some point in time, it's just going to help everybody's valuation
Mhm.
to
Mhm.
just buy a little bit of stock back if we can.
Mhm. And if I remember correctly, you're a major shareholder of the company. Maybe let us know what insider ownership position looks like for the company.
Well, I'm the largest shareholder, myself and my wife. We own close to 35 or 36%. Our team of the people that got these RSUs, they're all holding them. They own almost 8 to 10, well, close to 10%, I would say by now. So between myself and my team, we're well over 42 to 43% of the company. We have 3 or 4 close shareholders that are very tight with us. They're not insiders, but they're supporters. They've been shareholders since we started in 2000, so they're some of the original shareholders. They own about another 12 to 15 million shares, so that we've got a solid lock on the control. And then we have another large shareholder who was one of our original shareholders from way back that owns 15 million shares. And then I think there's some institutions maybe with 5 or 6 million each, and then the rest of it's all retail. We figure there's about 20 to 25 million shares that are out there in the float that are trading.
Gotcha. And is there an end goal here? Do you look to build this up and sell it, or is this, what if any exit strategy you have here?
Well,
there's a lot of acquisitions in the space. I imagine this is you get to a certain size, and there's a lot of entities that probably want access to this type of client base.
Yeah, GIVX is a public company. So as a public company, we're always for sale.
Right.
I would say that there's always going to be, and there could be people that feel that this is a good opportunity. Certainly with the control block that we've got, we're not anxious to say that we're going to sell it at the valuations that it's at today. But frankly, if it gets up to a valuation that makes more sense, then of course, everybody, it's act in my own self-interest and the self-interest of the shareholders is to, we're not going to sit there and say we're going to hold on to this forever. But at the same time, if we make strategic acquisitions or we find good mergers, all kinds of things. So GIVX can actually be sold, it could be merged, it could continue to grow the way it is with a couple of cool acquisitions, and the stock gets more and more distribution of the stock. Certainly the objective is to, I've got stakeholders that I'm concerned with. It's the shareholders, our team members that have been with us a long time, and our employee and our corporate and our companies. We have clients that have been with us like Nike, Marriott Hotels, McDonald's, Wendy's. These clients have been with us for almost 20 years. So they're also want to know that the company is stable and it's just not going to be maybe just blown off into somewhere where it's not going to be looked after as well as we do. You asked me earlier, what's our magic sauce? What does it makes GIVX different? And really, everybody that signs on to work with GIVX signs a pledge to keep our promises no matter what. We focus very, very hard on making sure that we keep our promises to our merchants all the time. It's not always easy to do, but we really focus on that. So a big part of our business, and why our payroll costs are probably higher, or maybe our revenue per employee is a little higher than others, is our focus is on support and on customer relations, because that's the way we keep clients. That's why our churn rate's less than 1%. Like hardly people don't leave once they're here. So that's our secret sauce over time. Let our clients grow, we grow with our clients. As they grow, our revenue grows. It works for everybody.
Everybody's happy. Yeah. As investors looking into the business and looking forward, what sort of metrics or maybe even catalysts should we sort of watch out for?
Well, we've just, launching a new product that can actually be a big, like right now, we just recently launched GIVX Engage AI. This is a huge amount of work that we put into this. Customers are loving it already. This is a sort of thing that can drive a lot of customer engagement for our merchants. So we expect to see that help drive a lot of revenue, and it's good margins in this stuff because it's all running off the same platform that we've already got. So finding and then larger merchants that we can bring on. They don't necessarily hit the ground running right away. Like Shell could take a year before you start getting any real revenue out of them by the time they move everything over. So the catalysts are just keep an eye on our press releases for key acquisitions and for product announcements, that we're trying to do things that are going to be smarter. To get our costs down. Like we're using AI now effectively in client support. It's just a start. We've got a fair bit of work to do, but we're using AI to help us speed up the work. our client services team. So if they're asked a question, then the AI can help them with the first part of the answer. Doesn't mean that AI is giving the answer, but it helps the server, or pardon me, the customer service rep speed up their answer to the client. Gotcha. So that's it. And then obviously focusing on how well we're doing on getting our payroll costs in line, and with that, trying to getting that EBITDA up, and then hopefully the small cap market starts to get a little more vibrant in the next in the year ahead. I don't know. You guys are all much more experienced at the markets than me. I'm an operator. I'm working hard to try and tell my story, but really our focus, has been, we've always made money. My focus is to continue to grow the business. And hopefully the markets pay attention to us at some point in time.
Yeah.
Yeah.
Don, is there, when you talk to investors, maybe, others in the space here, what do they get wrong, if anything? What are they getting wrong about your business?
They think we're a payments company. We're not a payments company. We're a software as a services company. We sell service and software, and the software and the services that go around it. Payments is part of what we do, but gift cards are not payments. Gift cards are marketing programs. They're used to look after. I give you a reference to go to a restaurant. My favorite restaurant. Here's a gift card for $100. That helps the merchant drive new business in the door. So our that's it, really.
Well, perfect. Is there any question I should have asked, or maybe I'll just leave it with a key takeaway? What do you want to make sure that everybody walks away with today?
I saw another question pop up about churn rate. Our churn rate's under 1%.
Under 1%. Under 1%, you said.
We hardly lose clients. We very rarely lose a customer.
That's fantastic. Yeah.
If we do, they're usually small clients, people broke, or franchisees that have gone broke or something like that.
Gotcha. Okay, well, thanks for that. But sort of back to the last one. Key takeaway. What do you want to make sure everybody understands or walks away with today?
Well, GIVX is to me a longer term hold. It's not a buy and sell and flip company. This is buy it, hold it. The original shareholders that invested with me back in 2000, I don't expect anybody to hold their shares for 20 years, but the people that did, their cost base is like 3 cents, and the stock's trading at 70 cents. So we've been able to make them money. I'm confident that over time we will make our shareholders money, but it's not something that happens overnight. It's a process. It's a journey, and we're looking for shareholders that that buy in for the journey and the time. And what'll happen is we continue to grow the business. Some large corporation will probably try and take us out. There'll be a nice upside if and when that happens. Or we do another financing, get a lot more shareholders out there, a lot more activity in the stock, and it grows on its own. So I guess that's the message that I try to make.
Keep grinding, and you get what you're looking for. No, for sure.
Yep.
Well, this has been great. Well, I appreciate it, Don. We've been speaking with CEO Don Gray of GIVX Corp. Symbol is GIVX on the TSE. Don, thanks for the time today, and really appreciate the update.
Well, thank you very much, Trevor. Thank you. And obviously, if anybody has questions, they want to reach out to me directly, they're more than welcome to do so.
Fantastic.
Great.
Bye for now.
Thank you.